For more on the markets, we cross to the Johannesburg Stock Exchange. Francis Hurd is standing by. Good afternoon, Francis. What's happening this afternoon?
Thank you very much, Nzinga. Well, you've touched on it, those concerns that interest rates in the United States may increase faster than expected, weighing on markets across the world. And this is crucial for us. Remember, higher interest rates in the United States may lure investors away from emerging markets like our own back to the US. That's always the underlying concern. And we're seeing the JSE down by more than 1%. Jerome Powell's comments also weighing on the rand, touching 1177 overnight. It's not far off that level at the moment. And remember, it was doing well following our recent political developments, closer to 1160 or so. So we have seen some weakening in the last 24 hours or so. Let's take a look at the numbers and then we'll bring you some analysis. So we're coming to you live from the JSE. I'm joined by Michael Traherne from Vexstacked. Thank you as always for being with
Francis,
us.
Great to be here.
So Jerome Powell, what did he say? Why is this causing all of this?
Yeah, basically he was implying that the Fed could potentially raise interest rates 4 times this year. Markets were expecting three times. He was basically saying he's not going to let the US economy overheat by having interest rates too low. And the general theory is that if interest rates are low, people spend more, businesses borrow more, and you get ahead of yourself, and then the downturn later is a lot more extreme because you've got all this debt in your personal balance sheet or on company balance sheets.
And 3 interest rates to 4, how can one interest rate be so significant for us as well? Because there are concerns about all emerging markets.
Yeah, so they're looking at this year and potentially next year. Markets are very forward-looking, and small changes, particularly off a very low base, have very long impact. And the general theory is that as it stands at the moment, US interest rates are so low that pension funds and anyone looking for any sort of return have their money in the stock market as opposed to having it in interest-bearing accounts. And as US interest rates increase, your pension funds can say, okay, look, we don't need all our money in the stock market because that's very risky. We'll sell off in the stock market and we'll move it into these interest-bearing accounts. And the result is you see extra selling in the stock market and people parking money in interest-bearing accounts.
And US debt or bonds in the US become more attractive compared to government debt here, say?
Yes, correct. So you have a look at what the risk profile is of US debt, and they're considered almost risk-free because of the size of the economy compared to the risk in South Africa and our interest rate, which is a lot higher than the US. And then investors say, do we want to take the South African debt that's a lot more risky but higher interest, or do we want to go for the US debt that is less risky and a lower interest rate? And as the US increases their rates, the US prospect becomes more and more attractive.
So is that why the JSE in the red today? Commodities, telecoms, banks, is it strong enough to weigh on all of those sectors?
We've seen over the last 5 to 10 years global markets sort of integrating into one emotion where if the US market's down, then Asia in the morning will be down, followed by South Africa and European markets being down, just given how linked everything is to everything else. So it's a sympathy thing. And with the rise of the ETF, where people are buying overall markets as opposed to specific stocks or specific sectors, if you're selling the market on that day, you're selling the market on that day, and everything goes down with it.
And the rand also down compared to, it's stabilized now, but compared to what we've seen of late. Is this all the US? There was talk of the cabinet maybe being too much of a compromise for investors. Is local politics also a play at all?
Yeah, so yesterday we saw the rand weaken a bit with not much movement from the other currencies. So that you would say is potentially politics-based. But it reaching 1178 overnight, that was basically all US-based. Like we were saying earlier, the US becomes more attractive, which means you sell emerging market currencies and you buy US dollars. And that's what we saw overnight. But still, 1178, I don't think you can complain. We were in 13s not so long ago.
True, true. It's all contextual. So the US are a big factor on the markets. What about the real South African economy? ShopRite results out yesterday. Some would say that they are so big, appealing to so many consumers, that it is something of a litmus test of what is going on in our economy.
Yeah, it's a good idea of what's happening on the ground, and the ShopRite numbers were very strong for 6 months ending in December, so we don't really have an impact of the renewed optimism that we've seen in January and February coming through yet. Those will be in future numbers. But things looking up. A big thing for retailers, though, is a currency's been strengthening over the last year, and the inflation that we saw 2 years ago because of the droughts in our farming areas, that subsided, and the result is that a lot of the food products weren't as expensive. So ShopRite overall doing well. Another company out with results today was Growth Point, and they're obviously the property guys, and they've got shopping malls and office space and industrial, and they showed office space and retail space, they showed higher empty areas, but the industrials, they showed occupancy up. So I suppose it's overbuilding of shopping malls and not enough building of industrial buildings.
All right, but some little green shoots, as it's always said. Thank you so much, Michael Traherne from Vestact, and that's a wrap from us at the JSE.